Dividend investing is a concept that has long been popular among investors, especially among those who want to live comfortably well into retirement. However, the prospect of creating a steady, passive income stream for oneself is enough to entice one to become an income investor. After all, making more money with your current money is too fantastic a chance to pass up. After making an investment, many companies pay yearly dividends, but some pay monthly. Do you know some of these companies? If not, would you like to know some? Because here are the 10 best monthly paying dividend stocks. Hello and welcome to today's video. Today we have tailored you yet another alluring video on finance. Before we start, a sub to the channel will be highly appreciated. Turn on the post notification bell, and without further ado, let's uncover the best monthly paying dividends. Number 10. LTC Properties, Inc. LTC Buildings, Inc. is a healthcare real estate investment trust, REIT, that invests in seniors housing and healthcare properties via sale-leasebacks, mortgage financing, joint ventures, and structured finance solutions such as preferred stock and mezzanine credit. On our top 10 of the top companies that pay monthly dividends, this firm is ranked 10th. 10 hedge funds out of the 873 monitored by Insider Monkey had positions in LTC Properties, Inc. worth $9 million. Number 9. ARMOUR Residential REIT. The ARMOUR Trust mainly invests in Fannie Mae, Freddie Mac, and Ginnie Mae residential mortgage-backed securities insured or issued by a U.S. government organization. It was established in 2008. On April 27, 2022, ARMOUR released its first quarter results. The trust earned $30.9 million in net interest income. At the end of the quarter, liquidity, which included cash and unencumbered securities, was $628.3 million, with an $8.48 book value per common share. Meanwhile, the net interest margin grew by 3 basis points from the previous quarter to 1.78%. 85% of the portfolio is made up of agency mortgage-backed securities, which included TBA securities. Based on stockholders' equity at the start of the quarter, the comprehensive loss was $148 million, indicating a 60% annualized return. Finally, interest rate swap contracts totaled $7.4 billion, accounting for 103% of total TBA securities and repurchase agreement obligations. The 15.8% dividend yield, 3.7% EPS growth, and a 6.6% negative effect from a sliding valuation multiple will deliver annual returns of 12.9%. Number 7. Generation Income Properties. Generation Income Buildings is an REIT focused on purchasing and managing income-producing retail, office, and industrial properties. The company's asset-based portfolio as of March 31, 2022 includes 12 buildings, 1 industrial, 7 retail, including 1 medical retail, and 4 office assets, all net leased to high-quality tenants in significant markets throughout the United States. Generation Income Properties released its Quarter 1 results for March 31, 2022 on May 12, 2022. The total revenue from the operations was $1.2 million, up from $937,000 in the previous year. This is a 26% growth rate year over year, owing mostly to the purchase of properties by the corporation during the last 4 quarters. Core AFFO was 4 cents per share, down from 21 cents per share in the previous year. The company's portfolio is 100% leased after the quarter, with all rentals due collected. Number 6. EPR Properties. Another REIT is EPR Properties. It focuses on owning experiential real estates like movie theaters, eat and play venues, ski resorts, and gaming facilities. The venue operators signed triple net leases with it to secure these sites. Many of these establishments were forced to shut their doors or operate at a reduced capacity for some time thanks to COVID-19. As a result of their inability to pay rent, EPR Properties was obliged to cease its monthly dividend in 2020. However, with vaccinations becoming more readily accessible, many individuals are regaining confidence in their ability to enjoy events outside the house. As a result, EPR's tenants are catching up on their rent payments. In July 2021, this REIT was able to restart paying monthly dividends. ERP Properties' current yield is favorable, but if the firm increases its portfolio, it may be able to raise it in the future. It came into 2022 with a lot of cash and a good bank sheet, allowing it to buy additional experiential real estate. Given the threat of internet streaming to movie theaters, EPR intends to focus on purchasing more attraction-related assets that customers can only experience outside the house. This might help to ensure the dividend's long-term viability. Number 5. Agree Realty. This REIT holds freestanding retail buildings with triple net leases, which means tenants are responsible for building insurance, upkeep, and taxes. It focuses on holding properties leased to critical shops, including groceries, home improvement, dollar stores, and medicine stores, which are less vulnerable to e-commerce or economic disruption. Agree Realty's dividend is supported by this approach, which generates consistent rental revenue. In January 2021, Agree Realty shifted from a quarterly to a monthly dividend payment schedule. Overall, it has a strong dividend track record. Over the last decade, this REIT's dividend has climbed at a compound annual rate of 5.5%. As Agree Realty expands its portfolio, the upward trend should continue. In 2021, the retail REIT purchased a total of $1.4 billion worth of properties, boosting its rental revenue and dividend-paying potential. Agree Realty has a healthy financial sheet, which will help it to expand. As a result, it expects to buy another $1.1 billion to $1.3 billion worth of assets in 2022 to fund its dividend increase. 4. Gladstone Commercial Corporation. Gladstone Commercial primarily owns net leased office and industrial properties in the United States, each accounting for 48% of the company's portfolio, and some retail and medical office buildings. Because secondary markets provide larger investment returns, this REIT also focuses on them. Gladstone can earn relatively regular revenue due to this approach, allowing it to pay a steady dividend. This REIT has paid more than 200 consecutive monthly dividends that have been equal to or more than the previous months. It has a large yield and slow growth. It entered 2022 with enough money and strong financials, allowing it to continue paying monthly dividends and increasing its portfolio. Number 3. Pembina Pipeline. Pembina can provide consistent cash flow because of a number of partnerships that the company has with other energy companies. Pembina has a strong dividend history, with payouts consistently increasing over time. As it completes further energy infrastructure development projects, it should be able to increase its dividend in the future. Pembina has a large backlog of secured projects and many more in the development pipeline that will help it raise its dividend in the future. Pembina is investing in lower carbon initiatives and continuing to support the mobility of fossil fuels. Along with its wind energy holdings, it's working on a carbon dioxide transportation and sequestration system with another Canadian energy infrastructure firm. It's also looking at hydrogen possibilities. These efforts toward greener options should be aided by continued dividend growth in the coming years. Number 2. STAG Industrial. STAG Industrial specializes in warehouses, light industrial facilities, and industrial real estate. This kind of property is in great demand. The pandemic boosted e-commerce adoption and expanded manufacturing to overcome supply chain challenges. As a result, occupancy levels have remained high while rental prices have risen, allowing STAG to produce continually increasing rental revenue. Over time, STAG has been able to increase its dividend. The REIT's capacity to constantly extend its portfolio has been a major growth driver. Since its IPO a decade ago, STAG has added more than 400 properties to its portfolio, bringing the total number of buildings in its portfolio to more than 500. The continuous development of this industrial REIT is expected to continue. Each year, it plans to spend $1 billion to $1.2 billion on property acquisitions. When you combine that with rising rental revenue from current properties, STAG should be able to keep raising its monthly dividend. Number 1. Realty Income Corporation. Another REIT, Realty Income Corporation ranks first and last on our list of the finest companies that pay monthly dividends. The firm invests in single-tenant, freestanding commercial properties in the U.S., Puerto Rico, and the United Kingdom. NNN leases apply to these properties. In August 2021, Handel St. Just, a Mizuho analyst, had a buy recommendation on shares of Realty Income Corporation. At the same time, the analyst boosted his price objective on Realty Income Corporation shares from $77 to $81. In the second quarter of 2021, 23 hedge funds out of 873 monitored by Insider Monkey had holdings in Realty Income Corporation worth $221 million. This compares to 18 hedge funds with a total position worth $183 million in the previous quarter. You may easily create passive income by purchasing monthly dividend stocks. While hundreds of businesses pay monthly dividends, these safe monthly dividend stocks stand out as excellent choices for investors looking for a steady source of income that is likely to expand in the future. That marks the end of today's video. Thank you for watching, and don't forget to subscribe and turn on the post notification bell. Until next time, stay tuned and explore the channel for even more similar content.